Hi, this is Minash Patel with IMTF Trade. Today I want to talk to you about major problem retail traders have. Remember, statistics show that 98% of retail traders fail. The number one reason why is that you go round trip. That means you're profitable at one point in that trade, but then you give it back. And today I want to show you a simple, clean solution on how to resolve that issue. That means figure out where you get out at max reward. A lot of people talk about entries and stuff like that, but today we're going to concentrate solely on how to maximize your reward so you get out close to the top of bullish trades or close to the bottom of bearish trades, and you maximize your reward and you stop from going round trip. So let's go to the charts and let me show you some examples of how to do that. Okay? So here is a chart here, okay? And I'm going to show you various instruments and various time frames because this will work for anything that's out there. I'm going to show you these brackets. They're called CIMTF support resistance brackets. They're very simple and short, okay? And what you're looking for is, let's say you're bullish. This is XBI, and this is basically in 2012. March here is when these brackets move. What happened was, as if you were bullish here, you were up going bullish, bullish, bullish here, and then all of a sudden these brackets move. When the brackets move, that's when now you got a problem. That means it could stop and reverse, or it could start a brand new trend. Okay, so remember that. What you're looking for are these brackets to move. And what it could do is it could stop the existing trend completely and force it to reverse, or it could start a whole new trend going forward. And that's what I want you to look at. So we're going to look at various instruments and various time frames, and I want you to see when the brackets move, what happened. Because why? Words don't matter. Proof is in the charts. That's where the actions are. So this is XBI here. This is biotech. You could see here, this was going up. All of a sudden, brackets moved, and boom, it got above all the brackets. So it's telling you it wants to start a new leg going up completely here. And you could see it tried to come back in here below these brackets. It didn't do that. Finally, eventually broke out completely and started a huge trend going forward. This is weekly time frame for XBI. This is XLE. And this is XLE was going up, and then the brackets moved in 2000. Then they broke out, started a whole new leg going up completely here. And then it started coming down. And when it started coming down, notice these brackets moved right there. It stopped it dead in its tracks right there. And then it consolidated in here in this big wide range. But these brackets have that tendency of stopping things, resetting them to either consolidate or to break out in a new way or to continue in the trend. And that's what your goal is, to figure it out. Here's SMH. And you can see here, this is January of 22 here. The brackets moved, kind of consolidate. Eventually, it went above these four brackets here and started a nice bullish trend there. This is NASDAQ on the weekly time frame. This is a current chart of NASDAQ here. And you can see here, this is going up here. And then March of 23, it got stopped. It went below these brackets and then came back. When it came back above here, this is when it started the trend, which was basically in 2024, beginning of this year, it broke out and then started the trend going to the top side here. So you could see here, if you were bullish and you got out right there, and then you waited for it to break the brackets right there or pull back to them, you got back in, you saved yourself a lot of gray hair and going for this headache of this here profit taking here. And remember, this profit taking could have been a full-blown trend reversal. It didn't turn out to be a full-blown trend reversal because there's still two lines that you can't see at the bottom of the chart here. That means it has to get below all four lines. So this is profit taking here until it gets below all four lines. Okay? NVIDIA, I'm sure you guys have heard NVIDIA. NVIDIA was going up, 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 up. And then May 23, it stopped here at these brackets here. You could have got out right there, and then it did a breakout order here. When it broke the brackets here, it started a whole new leg going up completely here, okay? So, and you could see exactly what NVIDIA is today because this is a live chart. This is a daily time frame for NVIDIA. This is kind of consolidating. Then all of a sudden these brackets moved up, provided a support, broke out here, went up, then the brackets moved again, telling you that it could reverse. Instead, it broke it again to start another trend continuation to the upside. This is daily here, just showing you the same thing over there. This is Bitcoin. So I'm sure this is the current chart of Bitcoin here. Bitcoin is going up until February 24. It stopped. Then it broke out of the bracket, started a whole new leg going up, then consolidate. Then the brackets moved. And then look what happened. It could not break it at all. So this is the point where you get out and then put a breakout order above it when it breaks out. And if you did, you would save yourselves a lot of money, because from there, it tried again to break out, it reversed completely all the way down here to about 52, 55, K or so forth, and now it's just sitting there going back and forth. Notice the brackets moved here, trying to stop it from going down. It went down here and then came back up here and then failed to keep on going down, and now it's here. So it's consolidating between these four lines. That means you got to wait for it to break above all four lines or break below all four lines, or wait for the brackets to move. When the brackets move, that's when your opportunity comes. Okay, here's currency on the weekly time frame. I'm sure you heard about the yen pairs being weak, especially US yen going bullish. So this was going bullish here all the way to September of 23 here. Then the brackets moved, stopped, went above it a little, then came back below it, then came up here, and then started a huge movement going up. So this shows you exactly how things happen. But the key is that in order for it to be bullish, you got to get above all four lines. To be bearish, you got to get below all four lines. Here, it got below here, below these lines here. It got below these lines, but they're only the two. They're not the four lines. So this is just consolidating here, so you would not even think it's going bearish at all. Here's Nifty, the Indian Nifty market. And you can see here that this Nifty market, the Indian Stock Exchange, really started to go up here towards the end of 2020. Okay, it took off, went up. Then the brackets moved, it stopped it, went down temporarily, it's not below all four brackets. Then it came back up here, broke it here, and that's what started the next leg, which is taking you all the way today. So this shows you the two phases for the Nifty market in it going bullish. This is crude oil. So you could see crude oil here was going down. Then all of a sudden right here, it stopped. It stopped it from going down. Then it's being consolidated. And it will consolidate until it gets above these two lines here or below those two lines, or the brackets move. And we're literally looking for the brackets to move, because that's when the opportunity starts to come. Here is soybean futures. This was going up, got capped here. This was around too close to August of 23, stopped, reversed, came all the way down, then got capped here. And notice it tried to stop it from going down. It couldn't do that at all, consolidated, and finally broke it here to take the next leg down. This is BDX. This is the ugly consolidation pattern where this is bearish and then start consolidating at the bottom here. Then all of a sudden the brackets move. And now this ugly consolidation pattern now is an opportunity here. Reason why is if it gets below all four brackets, it could start a nice bearish trend. If it gets below the four brackets, it now could start a bullish trend. So this consolidation pattern is most likely over, and it could start a trend. Here's FDX. I'm sure you guys have heard of FedEx. This was going down, 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 down. Then all of a sudden in beginning of 2020, it got stopped by the CIMTF bracket from going down, broke out here, went up, consolidated, but this is a huge consolidation pattern here to a point you could make really good money. This is Walgreens. This is my favorite one here. This is going down, the brackets moved, then it broke down here, and you could see this thing literally go from $44 now getting close to $10 now. And this was something you easily could see on the weekly time frame with these brackets here. Remember, the brackets represent long term, okay? This is pound USD on a 1 minute. So I wanted to show you it works for any instrument in any time frame. And you can see on the 1 minute here, it was going up, consolidated, broke out here, and then took off and went up. And now here's the E-mini S&P 500 on a 1 minute. Same scenario here, was going up, brackets moved, stopped it, broke out, pulled back, held it, boom, there it went up. Okay, so I wanted to show you how CIMTF can help you determine when the reward can stop or it can continue on to the next level. So we're working on a reward for the reward risk for the money management. It's very critical that you see this because you do not want to go round trip. If you have any questions, please respond to the social media post in the video description. Thank you.